avoid such an increase. For this reason, I'm glad to see the decreased budget request of $280 million and the President's acknowledgement that this committee has been saying for a while now that the requests for the past few years were inflated and not based on real needs. One of those issues I want to be sure to address today is the unnecessary furloughs that occurred in 2013. I understand that this did not happen under your watch as a chairman, but I do want to be sure that the employees of the CFTC understand that they were victims of what some of us think were some questionable decision making. We sent out a statement on October the 24th, 2013, and it was reported to the press that the CFTC had explicit legal authority to spend amounts necessary to avoid furloughs. At that time, CFTC told me that they could not use the authority. However, a short while later in January, 2 days after the day of agency-wide unpaid leave, CFTC used this same authority to prevent more furloughs. CFTC's choice to not prevent all agency furloughs rests squarely on its shoulders. With regards to CFT's FY15 budget request, look forward to ensuring that CFTC puts priority on resources by performing core functions properly and avoiding regulatory overreach. CFTC has finished the majority of the rulemaking under the Dodd-Frank bill without the bloated budget request over the past few years. Similarly, they should be able to implement the regulations without excessive funding increases. As I say, we look forward to working with the CFTC to find ways to streamline operations, putting a priority on the resources that are there, and avoid unnecessary regulatory overreach. Before we recognize you, Mr. Chairman, for your opening statement, I would like to recognize the ranking member of the subcommittee, the distinguished gentleman from California, Mr. Farr.
Well, thank you, Mr. Chairman, and I'd like to echo your words. Congratulations, and thank you for being here today. I was impressed with your testimony, and what happens in this committee is it's sort of a push-pull here. Some people think that we're going to solve our problems by cutting everything, and others feel we're going to solve our problems by adding everything. I was just interested in where the two areas that, and you don't have to answer this right now because this is an opening statement, but I want to address that essentially your statement that for the responsibility that we've given you in law that Congress enacted with Dodd-Frank is how many cops do you need on the beat. At the same time, this issue on technology, I mean, your increase is 17% increase in technology, and the play between using technology so that you can have less employees. I mean, just smart, modern operation. But it seems to me you can't use technology for cops on the beat. I mean, we have not replaced that in all the technology we use in law enforcement. We haven't replaced that, literally the cop on the street. And perhaps you can share with us how that interplays and why you need to sustain the budget that the President's asked for.
Thank you, Mr. Farr. With that, I'll turn it over to you, Chairman Wetjen. Without objection, your full testimony will be included in the record. If you'd like to summarize your testimony and hit the highlights, and then we can go proceed with questions. Again, we know we're started late, so we'll try to make up some time and trying to condense some things. So again, welcome. We look forward to your testimony.
Thank you very much, Mr. Chairman. Good morning, Chairman Aderholt, Ranking Member Farr, and members of the subcommittee. Thank you for inviting me to the hearing today on the President's fiscal year 2015 budget request for the Commission. In both my written and delivered remarks, I attempt to provide this subcommittee useful context to the important role the Commission plays in the financial system and the economy as a whole, as well as the important role this committee plays in helping our agency achieve its mission. I also hope to provide a clear picture of the potential risks posed by the continued state of underfunding for the agency. As you know, the Commission was directed by Congress to police the derivatives markets, which includes futures, options, and swaps contracts related to underlying commodities. These markets are critical to the efficient functioning of the global financial system and the economies it supports. Without them, a farmer cannot lock in a price for his crop, a small business cannot lock in an interest rate that would otherwise fluctuate, perhaps raising its costs, a global manufacturer cannot lock in a currency value, making it harder to plan and grow its global business, and a lender cannot manage its assets and balance sheet to ensure it can continue lending, fueling the economy in the process. The derivatives markets better enable these enterprises to do what they do best, create jobs and grow the economy. When not overseen properly, irregularities or failures of firms in these markets can severely and negatively impact the economy and cause dramatic losses for individual participants. And this is why appropriately funding the CFTC is so critical. The unfortunate reality is that at current funding levels, the Commission is unable to adequately fulfill the mission Congress gave it. That mission is to prevent disruptions to market integrity and the buildup of systemic risk, as well as ensure that these markets are free of fraud and manipulation. Recent increases in the agency's funding have been essential and appreciated. They have not, however, kept pace with the growth of the Commission's responsibilities, including under Dodd-Frank. Allow me to explain how the markets we oversee and the responsibilities of the Commission have grown. The notional value of derivatives centrally cleared by clearinghouses was $124 trillion in 2010 and is now $223 trillion. That is nearly a 100% increase. Now more than ever, a clearinghouse's failure to follow international guidelines in the Commission's regulations designed to ensure proper risk management could have significant economic consequences. The amount of customer funds managed by clearinghouses and futures commission merchants was $177 billion in 2010 and is now over $225 billion. The Commission's rules are designed to ensure customer funds are safely kept by these firms, and a failure to provide appropriate oversight increases the chance of risky practices, placing customer funds at risk. I must remind the committee that 2 such firms have failed in the last few years. The total number of registrants and registered entities overseen directly by the Commission, depending on the measure, has increased by at least 40% in the last 4 years. This includes 99 swap dealers, 2 major swap participants, and dozens of clearinghouses and trading venues. The CFTC also oversees more than 4,000 advisors and operators of managed funds, some of which have significant outward exposures across financial markets. Additionally, the Commission directly or indirectly supervises approximately another 64,000 registrants. These intermediaries are by and large well-run firms that perform important services for their customers. But those relying upon these firms and the American public deserve assurances that the risks the firms pose are being mitigated by an agency capable of meaningful oversight. Yet the agency's current onboard staff responsible for this mission is just 644 employees. The fiscal year 2015 request is a significant step towards the longer-term funding level that is necessary to fully and responsibly fulfill the agency's core mission. It recognizes the immediate need for an appropriation of $280 million and approximately 920 staff years, which is heavily weighted towards examinations, surveillance, and technology functions. The request balances the need for more technological tools to monitor the markets and identify risk and compliance issues with the need for expert staff to analyze the data collected through technology. In conclusion, the Commission's ability to appropriately oversee the derivatives marketplace hinges on securing additional resources. Thank you for inviting me today, and I would be happy to answer any questions.
Thank you, Mr. Chairman. As I mentioned in my opening statement, I'd like to correct the misperception that CFTC has been purposely starved for resources. Since the financial crisis of 2008, CFTC has received a 91% increase in funding, practically doubling its size from $112 million to $215 million. Yet we're constantly read in the press that the agency is just barely getting by, and you yourself have referred to the agency as resource constrained at different hearings. Given the substantial increase in funding and the work that CFTC has already accomplished, why CFTC needs another 30% increase in funding is what we would, like to hear your argument on that.
I appreciate the question, Mr. Chairman. I tried to, in my previous remarks just now, try to give a number of different measurements of both the marketplace and the entities that function in the marketplace we oversee. And I tried to give a sense of scale and also a sense of the increase in responsibilities. And on the scale side, those two measurements of the notional value of the market plus the amount of customer funds that are now safely kept and supposed to be safely kept under our regulations by both clearinghouses and FCMs is a good measure. And then I think that total number of registered entities that we either directly or indirectly oversee is a rather large number. As I said, it's roughly in total 68,000 registered entities. And that reflects an increase in one of the subcategories of about 40% over the last several years. So all that said, it tries to give you a sense, those descriptions try to give you a sense that the responsibilities have in fact grown. Some of that is a function of new responsibilities given in recent years, but the rest of it has to do with just regular organic growth in the marketplace and organic growth among the registered entities who are trying to serve needs for participants in these markets.
What with of course, the President decreased the budget request this year, and what's your rationale of his decrease?
Well, the budget request this year and in previous years when I've been involved in the process, I've always looked at each of them with the three primary focuses in mind, if you will. And I've always looked at these requests to determine, are we doing enough on the three core functions of surveillance, examinations, and enforcement. And prior to my current role, I would review them with those goals in mind to look and see, are we leveraging technology sufficiently, and are we including or adding enough staff to make sure we can satisfy those three key areas. I believe previous budget requests did that. I think today's budget request before you that we're here to discuss will put us on a very, very strong footing if funded at that level. I think we're going to be able to do a level job on those three key areas. The other thing I would point out is that the request this year is a little bit different because it tries to be respectful of the Congress's direction through the budget resolution, which basically called for level funding for discretionary spending as it relates to the current level of spending on the discretionary side. So in light of that, it just felt sensible and the right thing to do to be a little bit more constrained or restrained in the request.
Well, and I understand that you did not. This is the first time you've been in chairman as far as with the budget, and so you're not had as much involvement as you are now as chairman with the resources. So, but thank you for your response, Mr. Farr.
Thank you, Mr. Chairman. You indicated in your questioning there about, or noted that the percentage of increase in the budget. But I think it also fails to note the percentage of increase in responsibility. I mean, can you put that into some kind of percentage terms of I mean, you only, and I also read that you only have 40 more employees than you did 20 years ago. So lay out for me a little bit about what the magnitude of the Dodd-Frank responsibility is, and that's what this whole debate is about. Is we've enacted a law. It gives you lots of things to do in these categories, in an area that never been regulated before. So you're going into something that nobody really had a lot of experience with, rule writing, all that stuff, with a budget that we keep whacking away at. It doesn't seem to me that you can do what you're mandated to do in law, even with the asks the President's making. So could you put that in some context of what the increase in responsibility is?
I appreciate the question, Congressman. Again, I mentioned several before, but we might just key in on those entities that we directly oversee at the CFTC. And those would be these intermediaries such as Futures Commission, merchants, managed funds, swap dealers, and major swap participants. And in those four key categories alone, we've seen an increase of 40% in the number of entities now registered with us. And of course, once an entity registers, it's subject to a host of responsibilities under our regulations that we at the agency must oversee and enforce. So I think that's a pretty instructive measurement. The other, as I said a little bit earlier, the amount of customer funds now being held by clearinghouses and futures commission merchants has increased by more than $50 billion, I think the figure was. That's additional money that belongs to customers that has to be managed well and safely kept. And in the event of some sort of failure, which is something we've seen, unfortunately, in the last few years, those funds can be lost or tied up in a bankruptcy proceeding or whatever else for some amount of time. And we need to do our level best to make sure that doesn't happen again.
So, how short of what the President's asked for do you think the ask is? I mean, you seem to, what I've read, and this was part of it, came out of this New Republic article, which was November of last year. It really defends, I think, very strongly that Congress has been underfunding its responsibility for your duties.
So, Congressman, the question is how much?
Well, how many? I hear you have fewer people now for enforcement than you did in 2002.
I believe
how can that be? I mean, is that just because of we've not put enough money into enforcement?
Well, that's probably part of it. Some of it obviously has to do with attrition. But with again with more responsibilities at the agency, the growth within the Division of Enforcement has not been as fast as perhaps other divisions within the agency had to be in light of some of these new responsibilities. So that explains some of it too. But yeah, no, the request again before you today, I think will get us to the minimum level of staff that I believe we need to again execute on those three core areas: examinations, surveillance of the marketplace, and a good, strong, credible enforcement program.
My time has expired. Thank you.
Mr. Nunley.
Thank you, Mr. Chairman. Mr. Chairman, thank you for being here. Justice Oliver Wendell Holmes one day said, "I'm not near as concerned where a man stands as in what direction he's headed." And I like the direction you're headed. I like it when folks come here and say, we're going to request less money than before. Appreciate that attitude. But I have been around government long enough to know that when an agency comes and says we're going to make do on significantly less money, I need to ask a couple questions. So my main question is, you're not looking to supplant the decrease in funding that you're requesting by any type of increase or any new user fees, are you?
Mr. Congressman, I appreciate the question. The President's proposal or request references user fees. And if that's something that Congress entertains, there would be a lot of issues to work through, and you know, the CFTC would want to be part of that process. My view on the matter at the moment is that, again, even in the relatively short while that I've been serving as acting chair, I've seen firsthand the types of effects it has on the agency and our ability to respond to questions, to respond to petitions from from the marketplace, to try and respond to international regulators who are asking for us to enhance and improve upon and increase our coordination efforts and harmonization efforts. All those things take time and resources and people. And so the fact that we're falling a little bit short in our ability to do those types of things, it leaves me in the position where I'm basically open to considering anything to make sure that we, again, have the people we need to do the job and the technology necessary to leverage that human capital.
We need to talk long and hard before we start talking about adding new user fees or increasing anything that you're already doing. All right, let's move on. I understand you're involved in looking at doing some regulations dealing with high-frequency trading. Just explain to me from a layman's point of view what you're hoping to accomplish and how you want to accomplish that.
Well, Congressman, the main thing the agency has done is we put out for comment a concept release that asked a series of questions to the marketplace concerning how do we make sure these types of firms do not pose unacceptable risks to the marketplaces that they're operating in. And the use of algorithms and computer technology to increase the speed with which trading occurs, it creates a certain type of risk that has to be accounted for. And the exchanges and the participants themselves have a number of risk controls in place already. And so the basic thrust of the concept release was asking questions to the marketplace. Are the controls in place now the sorts of controls that are bare minimum necessities to control for that risk? And then it also asks questions about what other types of controls might we consider. And so the focus is really on risk, and it's the type of risk that's posed by the fact that the trading activity happens so fast through the use of computers. And again, it creates unique sorts of risks and issues for policy issues that the Commission needs to work through.
All right, in light of the fact that you've not fully implemented all of your rulemaking that's required under the Dodd-Frank Acts, why would you think it's necessary to move forward in new areas of regulation?
Well, I think, again, as it relates to high-frequency trading, where we are in the process is we have put out for comment this concept release, and recently the comment period is extended. I think it might be closed now. So what we'll do now is we'll read through what was submitted to us. I'm sure there'll be a number of discussions that take place, and depending again on what the impact or input from the marketplace is or was through that process, we'll have to make a judgment about what to do going forward. But I haven't prejudged the concept release or the comment letters that have been filed under it. So that's where we are in the process at the moment.
All right, thank you, Mr. Chair.
Mr. Bishop.
Thank you very much, Mr. Chairman, and welcome, Mr. Wetjen. As you know, there have been several entities who have been working for some time with the CFTC on enforcement with respect to the metals market for aluminum at the London Metals Exchange. Your predecessor, Chairman Gensler, last summer indicated the CFTC has the authority to act in trading manipulation related to the London Metal Exchange. Given the CFTC's role in protecting and preserving the integrity of commodity markets, are there funding or research issues that are preventing the Commission from exerting its proper authority to bring the London Metals Exchange practices in accord with global commodity exchanges where commodities are traded?
Mr. Congressman, I thank you for the question. Whenever the agency and the staff at the CFTC hears anything from the marketplace about possible manipulative activity, we take all of it very, very seriously, and we look into it. If we are resource constrained, obviously that could have some level of impact on our ability to pursue certain sorts of conduct or activity that is revealed through some kind of an investigation that we might do at the agency.
Is that the case in
well, I can't speak to any ongoing investigations specifically, but it does stand to reason. The fewer resources we have, the harder it will be to pursue that in the best way possible.
Well, you ultimately would need additional resources in order to address those concerns.
It would definitely be helpful, yes.
Thank you for that forthright answer. As you may know, last year I shared my concern with Chairman Gensler regarding the potential international reach of the CFTC's proposed cross-border rules, particularly as they might impact Europe and Asia. Specifically, there was a concern in the industry with respect to the scope of cross-border applicability, as well as the fact that both the SEC and the CFTC share some responsibility for regulating swaps. Can you give the subcommittee an update on this matter? And I'm particularly interested in where you are and the SEC are in terms of the rulemaking process and whether or not there's a possibility of enacting rules that would be similar, if not the same, so that the regulated parties will not have to comply with multiple rules. Also, can you update us on any discussion with your counterparts in Asia and Europe regarding this issue and any outcomes? It's our understanding that the European Union is not expected to take up any rulemaking until 2016. And just tell me whether or not that's going to create some heartburn for the U.S. Because of the delay.
Thank you, Mr. Congressman. I guess there are 2 points. The first is our coordination with the SEC, and then our coordination with Europe. On the former, as you likely know, the CFTC finalized its cross-border guidance last summer, and that was the result of a fairly lengthy process that included a proposal where we solicited comments from the marketplace. The final guidance from last summer was a deliberative process that led to it, and I think did a level job of taking into account the feedback we got through the comment process. And so, again, that's been in place now for more than 6 months. Meanwhile, the SEC continues its effort to implement a cross-border policy, and I can assure you there's a lot of discussion taking place between the two agencies. In fact, in just the last few weeks, as a sponsor of the Global Markets Advisory Committee at the CFTC, I hosted a meeting on cross-border on the CFTC's cross-border policy, and we had staff from the SEC who were present at the meeting and presented and gave us their views on a host of different topics. So that's just one example of how the agencies continue to work fairly closely. Some of this happens outside the public eye, of course, and a lot of it happens through the staff, but there's a lot of dialogue, I can assure you, especially now, as I said, given the fact that the SEC still has to do a few things by way of rulemakings to put their policy in place.
I think my time is just about expired. Thank you.
Valadao.
Thank you, Mr. Chair. And Chairman, Andrei Kirilenko, former CFTC Chief Economist, recipient of the CFTC Chairman's Award for Excellence in 2010 and co-author of the 2010 Flash Crash Report, has recently produced a new paper on financial regulation in his role at the Massachusetts Institute of Technology. Some recommendations he had for the financial regulators are: financial regulation should recognize the automation and increasingly higher transaction speeds make it nearly impossible for humans to provide effective layers of risk management. Regulators need to change their surveillance and enforcement practices to be more cyber-centric rather than human-centric. My question is, your budget requests only a small increase for the development and modernization and enhancement of technology. However, it requests an increase of 35% for new staff. Can you explain the discrepancy given these recommendations?
Thank you, Mr. Congressman. I go back to the three key areas of our mission that I mentioned before, and they are, again, surveillance, examinations of our registered entities, and enforcement. And in order to do a sufficient job in those three key areas, we need the additional staff requested under this budget. That's not to say we don't need additional investment in technology, and I completely agree that we do. And I do agree with, I haven't read Mr. Kirilenko's paper, but I do agree with his thesis, and we've been trying to use and deploy some of the new funds set aside for technology for new initiatives. One of those new initiatives that's being considered is trying to collect and analyze order message data. That's something that some of the other commissioners at the agency have shown some interest in as well, and that's the sort of thing that I think would speak to or respond to some of the issues it sounds like raised in Mr. Kirilenko's paper.
Thank you.
Morning.
Morning.
Good morning. Thank you. Thank you for your, I'm sorry I wasn't here for your testimony, but delighted to have you as a witness this morning. I want to first say very quickly that I was stunned, but pleasantly stunned, to read your forthrightness, your honesty, and the clarity of both yourself and Commissioner Chilton about underfunding and what that means to your agency. Couple quick, very quick questions, yes or no, and then I want to move on to the question. Are you a regulatory agent?
Yes.
Okay. And with that, simply, what do you regulate?
The derivatives markets.
How much money is involved in that derivatives market?
Well, the size, the notional value of the markets fluctuate, but it's anywhere between $400 and $500 trillion.
$400 to $500 trillion. $1 trillion a day, my colleague, Mr. Farr, talks more than that. So now, I'm going to get to dollars that you need and the risks to underfunding that may not come up in this round, but I will get back to that. But your testimony, CFTC has fallen far short, quote, of performance goals for its examinations activities due to a significant lack of resources. Now, this is a subcommittee that has recently been obsessed with reducing fraud and error rates in the SNAP program, which has one of the lowest error rates of any federal program at 3.4%. I would hope that my colleagues would be equally concerned with fraud and abuses that go unchecked in the swaps, futures, and commodity markets. I might add that, as I understand it, you've had 82 enforcement actions over the last 3 years. You brought in more than $1.7 billion in sanctions. This would seem an area where additional funding would yield additional revenue for the government. And we provided an appropriations amount in that time of about $600 million. When you have been forced to prioritize your investigations, what's been left out? What would you be able to accomplish with a more robust funding level?
Congresswoman, I appreciate the question and your interest in the agency. Just speaking to, again, one of those three core areas that I mentioned, enforcement, as you alluded to in your question, we haven't really grown that division much over the last number of years, and we're actually at a lower level than we were more than a few years ago. And so with fewer staff and enforcement, obviously it stands to reason there's probably going to be fewer enforcement matters the division can bring. And so we want to be able to, we want to have a credible enforcement program, and so we want to be able to pursue any relevant type of conduct or manipulative conduct that an investigation turns up. And so again, in order to do that, in order to respond to every referral that comes in a meaningful way, in order to respond to referrals from our Division of Market Oversight, which is the division responsible for surveillance, we have to have
would you be able to bring in more revenues?
It's hard to predict that because it sort of depends on the nature of the case, but it would stand to reason that the more matters you bring, presumably the more revenues you would bring in by way of fines, yes.
To be repetitive, it's been 3 years, $1.7 billion. What a heck of a return on an investment there. I also might add that my understanding is that in 2002, you had enforcement people, the numbers were 154. In 2014, we have 149. And just very quickly, once again, the difference between what you were doing in 2002 and what you were doing in 2014 and the dollar amount that you are dealing with now as opposed to 2002.
Yeah, Congressman, that's right. Again, I mentioned the 40% increase in the number of registered entities directly overseen by the agency. I think that's a very good measure of the growth of responsibilities. I also go back to the increase in the amount of customer funds that clearinghouses and futures commission merchants have to keep safe and manage for risk. both numbers have increased substantially, and so all the more reason why we need to keep a close eye on what's happening in these markets.
I would just conclude by saying that my own view, and I think it's evident here, is that strong funding for the CFTC reduces the deficit in many more ways than a lot of other actions that we are presuming to take on, and so that we ought to be able to provide the resources necessary for this regulatory agency to carry out its mission. Thank you, Mr. Chairman.
Thank you, Mr. Chairman. Mr. Chairman, thank you for joining us today. Appreciate your testimony, and I want to compliment you on your open approach towards making sure that we have good information, good comment opportunities for folks to weigh in on some of the important decisions you're making at the CFTC. I want to echo some of the concerns that Mr. Bishop brought up regarding cross-border swaps. In fact, our committee last year passed a bipartisan amendment to support the notion that the SEC and the CFTC should coordinate on these swaps so that we have as much certainty and consistency, predictability, and openness in the process to ensure that the rulemaking is done in a way that achieves the goal, which is to protect consumers and ensure that the CFTC can do its proper oversight. I just want to note that I think the changes you brought forward as acting chair have been very positive and improved in that regard, and it's been noticed. I want to ask a little bit of a follow-up from Mr. Bishop's question, and the guidance that you put out, I guess, in November. I know you've put that on hold and are seeking further comment because of the disarray it's caused in the market. Can you give us a status report on the comments that you're seeking and with respect to the November changes?
Thank you, Mr. Congressman, and I appreciate your kind words. The advisory you mentioned from November 14th of last year was indeed put out for comment by the Commission at the beginning of the year, and I think there's a little bit of time left in the comment period. So the status is we need to once the comment period closes, we need to carefully review what's been submitted and get a better sense of how exactly the marketplace views or thinks that we should resolve the set of circumstances addressed in the advisory. And there are a number of different ways we could do that, including sticking with the advisory, but we could, depending again what the comments that come in say, we could consider a number of different things. And so I can assure you there's openness to considering any number of different ways to handle this, but I think that with respect to the guidance from the summer, the cross-border guidance from the summer, I think that people can perhaps quibble around the edges, but I think it reflects pretty sound policy and was a result of a very long, lengthy deliberation process. So I'm very interested in making sure that stays in place and people can continue working and complying with it.
What's the timeline on the completion of the November guidance?
The no action relief currently in place lasts until September. So the comment period, as I said, I believe closes in another week or so. Roughly, is that right? Yeah, I think we have a couple more weeks or so on the comment period. So again, presumably we would want to, after reviewing the comment letters, make some sort of a decision about what to do before the related no action relief expires in September.
Fair enough. We've seen a lot of news about banks' involvement in the commodities markets. I know the Federal Reserve is seeking public comment on this topic. However, the CFTC has the authority to police those markets for manipulation. Do you believe the CFTC has enough statutory authority to gather the necessary information to protect the commodities markets from fraud and manipulation?
Yeah, I believe so. There's of course reporting obligations of the marketplace related to derivatives. The agency also has special call authority that it can rely upon if it hears of something or gets a referral and wants to follow up with additional information. So that's something that we have at our disposal. We of course can share information with other federal agencies. And an example of this that doesn't necessarily relate to all the energy markets, but at least with respect to power and electricity, we just announced the the first transfer of data from the CFTC to the FERC yesterday, and that was done pursuant to a memorandum of understanding that the two agencies entered into, which we were directed to do by the Congress several years ago. So I feel reasonably confident now that we're able to get the information that we need to pursue any enforcement actions if necessary, if there's manipulation taking place.
Thank you, Mr. Chairman. Yield back.
Ms. Fordberry.
Thank you. Good morning, Mr. Chairman. I'm sorry I didn't have the benefit of your earlier testimony, so I'm playing a little bit catch up here, but I did review some of it. Are the derivatives markets broken?
I don't believe so, no.
Do they function well?
I think they function reasonably well. There's a structural shift taking place on the swap side, as you know, given the reforms of the last several years. And there's going to be some adjustment that goes along with that, but I'm not hearing or seeing anything that leads me to believe that there's brokenness in the markets now.
Here's why I asked the question, and I think you're probably aware of what I'm hinting at. When you have an inverse relationship of what has traditionally been between hedgers and speculators, when you have unexplained price volatility when there isn't a disruption of supply, for instance, the very purpose of a derivatives market, which is to hedge risk and decrease volatility and make the market more perfect, actually may be lending itself to increased volatility and market brokenness. And that's the point of my question. The point, an example here, in 2008, the price of oil shot up to $145 a barrel. Then it rebounded, came back down. By 2011, there was a run-up of about 20% in the price of oil, but gasoline prices went up to their 2008 levels. Again, no interruption of supply. So this unexplainable price volatility begs the question as to whether or not speculation in the market itself is undermining the very purpose of the market to decrease volatility and hedge risk.
Congressman, I appreciate the question. I think you know, I haven't studied the data closely. It probably would be confirmed in most studies that certainly there's been perhaps an increase in volatility, at least during certain periods of time or the last number of years in the markets. There are a number of possible explanations for that, including the question asked earlier about the presence of high-frequency trading firms. So the trading velocity and the trading volume has changed a lot. But I think the real measure of whether the markets are working or not, or the best measure is there sufficient liquidity for those who really need to do traditional hedging? Is there sufficient liquidity in the marketplace for them to achieve that purpose? And I think by and large, my sense is that in most cases anyway, that's something that's achievable for them.
Well, I wouldn't disagree with that, but at what cost, given the volatility and what's causing the volatility? Is it basically underlying structures of supply and demand? Not clearly. And so the market itself may be a factor, a significant factor, in the increase of volatility, which is very disruptive to free market economies. In other words, it begs the question as to whether or not this is functioning properly. It's a larger academic question, I recognize that, and your day-to-day management of trying to ensure there's not fraud or insider trading, all the things that you do, maybe don't lend itself to a deeper reflection on this purpose. But I think it's important, because the very reason we're talking about giving you more money is because we keep seeing problems here. We don't want any cheating. We want the free market to function properly. But at the same time, if the fundamental structures are cracked, betraying the very purpose of the market, I think that's something we have to look at, think through.
Congressman, it's a very thoughtful point and question, and I agree. I think it would be worthwhile to take a step back and maybe look at the big picture, and perhaps I could follow up with you after the hearing and figure out a way to do that, and maybe get some additional information for you that could be useful. So I'm happy to follow up with you on that.
I appreciate that. Thank you, Mr. Chairman.
Oh, you mentioned in your testimony that various statistics have been used to measure the increase of CFT's responsibilities. One thing that's mentioned is the gross notional value of hundreds of trillions of dollars, which is several times larger than the world economy. But the Bank for International Settlements has publishes data that would disagree with that. I'd like to look at some measurements, other measurements. You are including 1, increase in trading volume, number 2, increase in customer funds, and number 3, increase in registered entities under CTFC. Using your own statistics, number 1, the increase in trading volume for futures is 13%. For swaps, it's 33%. The increase of customer funds is 27%. The increase in registered entities is 40%. So the highest metric you've given would be 40%. Yet the CFTC's budget since the financial crisis 2008 has increased 91%. Explain to us the request for another 30% increase in CFT's budget.
Mr. Chairman, I appreciate the question. The way I approached this budget was looking at those different ways of measuring, but also looking at the mission of the agency set out under the statute. I analyzed it by focusing on the number of people we have and then making judgments about the number of people that I thought we needed to execute on those mission activities, focusing again on the 3 key ones for me, which are enforcement, surveillance, and examinations. And I just went through the divisions and looked to see, well, how many people do we have doing those 3 key things? In examinations, in the Division of Clearing and Risk, it's a very small number. I think it's around 12 or 13. In the Division of Swap, Dealer, and Intermediary Oversight, it's slightly larger because they have more registered entities under their purview, but still a pretty small number. In fiscal year 2013, looks like it was 48. And again, in DSIO, that division oversees tens of thousands of entities, either directly or indirectly. Most of those are indirect, but a substantial number are under the CFTC's direct oversight. So, we don't need enough people to look at every single last one of those registered entities year after year, but we need enough to basically keep the entities honest and to do at least a reasonable, acceptable level spot check of those registered entities. And again, based on the number we have today, we're not able to do that.
You mentioned the CFTC's leverages the resources of self-regulatory structure. The number of regulators includes around 800 staff plus CFTC's 647 employees, and that would make a total of about 1,450 employees to regulate the industry. Do you think it'd be more transparent to acknowledge the totality of the hardworking regulatory staff rather than just the CFTC's own in asking for the increase?
Well, I think the budget request itself does indeed acknowledge that. There's a reference to the fact that there's a coordination and cooperation effort with the self-regulatory organizations, and so I can certainly concede that point. But the types of reviews that the SROs often do is a little bit different than the type of reviews, at least focusing on examinations, the sort of examinations that the CFTC staff would be responsible for doing. The CFTC staff ultimately is the ones responsible for providing interpretations about what the regulations actually require. And they look at and do these examinations through a slightly different lens, I would suggest. It's much more risk-based. It's much more policy-driven. And so with that type of approach in combination with the approach taken by the SROs, I think in the cases where you have both entities involved, both the SRO and the CFTC, that's how you get the best oversight. But again, even through that type of cooperation where we're doing a qualitatively different type of review, and we're not doing it of all the registered entities that the SROs might have direct oversight over, we still don't have enough people to have that level of cooperation. So again, that's why the request was made at the number it was requested at, because we need additional staff, additional FTEs focusing on that examination function. Just focusing on examination for now. It doesn't get into enforcement and surveillance.
Mr. Farr.
I find that people are always fighting regulation in politics, at whatever level of government you're in, and yet it's the business sector that comes in and asks for regulations. They want licensing, they want standards set up, they want certainty, and certainly financing is of all of them. I mean, you want some predictability that you're not going to have a disaster. That's unforeseen circumstances are going to occur, because that makes it a lot more risky. There must be somebody out there in the private sector that wants you to have more staff and do a better job of providing an opportunity for transparency, because this is what we're really talking about, is transparency, and then where you find anomalies, enforcement. Who are the people that might be interested in seeing you get a bigger budget?
Mr. Congressman, I could identify them. I could probably give you their phone numbers too, if you like, although I won't do that here. No, to be serious, that is in fact the case. We have tremendous demands placed on the agency right now. Demands for clarifications, petitions for one purpose or another, including relief, or including some other action expected or needed from the agency. Demands for guidance, demands for interpretation. So, and I mentioned it a little bit earlier, there are a number of demands on the international front, and as we know, these are global markets, and there are other regulators and jurisdictions who have a say in the oversight of these markets, and there's a tremendous amount of dialogue that takes place between the other regulators around the globe. They have demands. We have demands of them. Let me give you an example. The European Commission right now is undertaking a number of equivalency determinations. And these are determinations about whether or not some of our rules are sufficiently similar to theirs, or whether some of the entities based in the U.S. but operate over in Europe can follow CFTC regulation rather than European regulation. That includes dealers, that includes clearinghouses. And so there's a tremendous amount of work and time that gets put into having those dialogues and trying to work with these other regulators so that they come out with a good result on their own equivalency determinations.
What U.S. entities, companies want better regulation?
Well, I think my sense is that most participants in the derivatives markets think that confidence is built and there's greater credibility when there's sufficient, strong oversight of the markets. When we saw the failures of the two FCMs several years back, it was kind of a jarring event, I think, for a lot of the participants in the futures market in particular, because it was a failure of a sizable firm. A large number of customer funds were put at risk and tied up in bankruptcy. And I don't know if there's a crisis of confidence, but as I said, it had a real jarring effect. We could sense that at the agency, and it seemed very, very real to me. And so those who are watching that incident very, very closely, I'm sure most of them would agree that we need a properly overseen and properly regulated FCM community to make sure that people continue bringing liquidity to these markets that the FCMs intermediate in.
I mean, most of your activities you stated are in surveillance, examinations, enforcement. I think that's similar to what our intel agencies do. And in essence, I'm just thinking, if you were an intel agency before a congressional committee and asking for the assets to do this, I doubt that we would be criticizing you in the sense that you don't need the money or you don't need to do the work. In order to have the intelligence of our markets, and in this esoteric area of future swaps and options, we need it more than ever. So I just think that this committee, we ought to think about this. This is our responsibility. That do we really want to handicap this agency in a time when we've enacted the law and told them what to do, and then turning around and not allowing them to carry it out? It seems to me very dangerous.
Mr. Dunley?
Thank you, Mr. Chairman. The CFTC is involved in a rulemaking change that's going to lower the trigger for transactions from $8 billion to $3 billion. How many firms will be added at the $3 billion trigger that are not covered with the $8 billion trigger?
Thank you, Mr. Congressman. The agency doesn't know the answer to that right now. The way the swap dealer rule works is that it set the threshold at $8 billion, which is to last until October of 2017. And there was a request of the Chairman Adderholt, to try and do some of this analysis sooner, which we can and will do. But we'll have to analyze and try and solicit some information from the dealing community itself to get a better handle on that, and we're happy to do that. But just as far as how the rule operates, the threshold remains in place until 2017. I think originally the thinking is that once we had pretty solid reporting from the SDRs on swap data activity, that would give us an even better handle on how to determine what the level of dealing activity was among these different firms, and make a judgment closer to that date. But we can do it sooner if that's the wishes of the committee.
Do you have a feel for a range of the number of firms that may be added by this change in comparison to the number that you're currently regulating? Is it 10% more, 100% more?
Honestly, Congressman, now we have 99 swap dealers registered, and I don't have the feel for how many more it would be. I'm sure it'd be some, because we are aware that there are other entities that do the sort of dealing activity that would be encompassed by the swap dealer rule we put in place a couple of years ago. But I'd have to get back to you on a better approximation.
That's one of the things we'll be interested in, and then as a follow-up, we want to, okay, how are you going to regulate an increased number of firms while you're requesting less resources?
Well, on the request, what we requested today would be, I think, a substantial increase above what we have now. But I take your point.
So thank you. We may be following up with questions for the record on that. Thank you. Thank you, Mr. Chairman.
Who are we next? Oh, Mr. Bishop, I'm sorry.
Thank you very much. As you know, Dodd-Frank, as a part of the CFTC's expanding enforcement obligations, created an authorized whistleblower program. And it's my understanding that the Securities and Exchange Commission has recently received more attention for its whistleblower program. However, whistleblowers have been very active at the CFTC regarding a wide array of fraudulent practices, from price manipulation to Ponzi schemes. In fact, the number of whistleblower claims filed with the FTC has jumped from 58 in FY12 to 138 in FY13. Can you update us on where the whistleblower program is currently with CFTC, and what resources are being proposed for next year, and what are your plans for promoting its existence, including any awards program?
Thank you, Congressman. We do in fact have a whistleblower program. It's relatively new. There's a sizable budget for it. I'd have to get back to you on the exact number, but as you pointed out, at the SEC, we've seen the successes that can come from this program, and there are a lot of referrals that can be generated from this type of program. So again, I think it's going to be a nice addition to the program at the CFTC to try and make sure we're responding to any manipulative or fraudulent activity in the marketplace. But I'm happy to follow up with you on more specific figures.
As you know, the CFTC is included in the Ag Appropriations Bill because of its historical connection to agriculture markets. But the number and the scope of non-agricultural issues has dramatically grown at the Commission in recent decades. But despite the growing importance of the non-agricultural issues, agriculture issues still remain a critical component of your work. I'm concerned that given the fiscal environment in which we're operating today and the inevitable budget reductions which will occur in every agency of the federal government, including yours, the CFTC's management of agriculture markets could possibly get the short end of the stick. How do we make sure that agriculture does not disproportionately pay for reductions in your budget, combined with the growing pressure you're under to expand the agency's non-agricultural activities, particularly as a result of Dodd-Frank?
Thank you, Congressman. You're right. The ag markets, in particular, have played a special role in the history of the CFTC and also in the history of the markets. And I think in a lot of ways they developed in that space and expanded from there, as you said. We're always trying to be mindful of the special needs or special issues that can materialize in the agricultural asset class, and we try to pay careful attention to that. Just to give you an example, we have a weekly surveillance meeting at the CFTC, and we're going to cover a couple of topics tomorrow that actually relate to agricultural products. So it continues to be an area of importance. And especially since the underlying commodities of these derivatives contracts are so meaningful, important to the everyday citizen, we always need to make sure we're taking care to understand exactly what's going on in those markets and watch them very carefully.
Right. Finally, let me ask you, going back to Dodd-Frank and farmers, one of the little-known goals of the Dodd-Frank is the facilitation of a more transparent risk management process for farmers and ranchers. But it would appear that the resulting transparency has come at a real cost, particularly to the nation's farmers and ranchers, who utilize futures markets for hedging and are now experiencing dramatically increased risk management costs. As part of the CFTC's efforts to expand transparency, a new rule governing records of commodity interest and related cash or forward transactions was issued and approved in December of 2012. Under this rule, all communications leading to a futures or swap transactions are required to be recorded, including voice and text message recordings. Voice recording systems can cost upward of $50,000, which is likely cost prohibitive for most small to mid-sized working farmers and ranchers. Several major farm organizations have expressed some concern regarding the rule's recording requirements and their cost effectiveness. Can you tell us the thinking behind this particular requirement, and was the CFTC aware of the cost impact that this would have on farmers and ranchers? I'm always reminded of a cost-benefit analysis that I feel should always be done when regulations are put in place.
Congressman, I appreciate the question. There was a rulemaking on our Regulation 1.35, which is the voice record keeping requirement that you mentioned. There was a cost-benefit type analysis done under a statute with respect to that rule, as it's done with every rule. I think it's fair to say that when crafting that rule, and there was an attempt to calibrate it in a way that it was focused on the categories of market participants where you're most likely to see manipulative or fraudulent activity, and I think probably, Mr. Bishop, you and I would agree, farmers don't normally come to mind. But we have heard some of these concerns raised as well at the agency, and for that reason, as well as because we're hearing some concerns about some of our other rulemakings that seem to impact the end-user community. Just this week, I announced a roundtable on end-user related issues, including 1.35, including the special entity de minimis threshold for swap dealers, as well as the 7-part test for volumetric optionality, which is a long way of saying it's a test to figure out whether or not an instrument is a trade option or not. And so we're going to host a roundtable to talk through in more detail issues related to the rulemaking that you mentioned, and we'll be doing that later this month. actually in early April.
Is there a likelihood that you might provide a little relief to?
Well, I think we're very much in fact-finding mode. Again, if I could characterize it this way, and I'm sure staff in the building at the CFTC might have more detail, but right now it's just noise, and so we need to get to the bottom of it, and that's the purpose of the roundtable.
Mr. Yoder.
Thank you, Mr. Chairman. Yeah, on the topic of transparency, you are the CFTC's rep on the Financial Stability Oversight Council, FSOC, which was created by Dodd-Frank as one of the many regulations to create certainty and predictability in the markets and protect consumers again. It's come under some criticism for being weak in terms of transparency, in terms of who's being regulated, why they're being regulated, how those things are arrived at. And I wonder if you could assure the committee that you will help do everything you can to increase the transparency on the FSOC so that Americans, stakeholders, all of us can ensure that we know what's going on and why it's happening.
Mr. Congressman, I appreciate the question. I agree transparency is important. I will point out additionally that under Dodd-Frank there are a number of responsibilities given to the FSOC, as I'm sure you're aware, including certain designations, systemic designations of certain financial institutions. And there's a lot of sensitivity around that process for reasons I'm sure you can imagine and are aware of. And so there has to be some balancing between the need for transparency but also the need for making sure that some of the sensitive information that's discussed in the context of these FSOC meetings is kept close. But I'm more than happy to continue talking with you about ways to improve transparency around FSOC where appropriate.
Well, I think anything we can do to ensure that Americans know why its government does what it does and what its rationale is, and give voices to folks that don't normally have a voice in the process, to ensure that when oversight is occurring, it's being done consistent with what congressional intent is, with what Americans want. I think my colleagues on both sides of the aisle would argue that we should always err on the side of transparency, absent, national security questions or other things of classified nature. The idea that the deliberations of the FSOC should be less transparent or not be fully open to the public, I think, is concerning to a lot of us, and it weakens the effectiveness of those who would hope that we do a better job of oversight in the country. And finally, as you know, the CFTC's inter-affiliate rules don't just impact banks, they impact end users. They certainly have an effect on folks all across the country. As market participants work to come into compliance with new regulations, what will you do to ensure a smooth market transition? Will you work with market participants to provide relief when necessary? And for example, the inter-affiliate exemption from clearing requirements will soon expire. How can the CFTC ensure that this does not have unintended consequences or market disruption?
Well, that you mentioned the inter-affiliate clearing exemption for clearing, and there is an action by the Commission that's outstanding that expires on March 11th, as you mentioned. The extension of that has been circulated around the Commission, and that'll be released today. As far as orderly transition more generally, we've had to respond at the Commission in a way over the last several years to ensure that very same thing that you mentioned. And there has been no actual relief that's been issued. There has been interpretive guidances issued and the like. And we'll continue to do that as necessary. In fact, we had to do it recently in the run-up to the effectiveness date of our trading mandate. And so some issues were brought to the Commission's attention regarding certain types of trades that are commonplace in the market, important for participants to continue doing. But there was not a state of readiness in the infrastructure for swaps to continue trading those on a regulated sub-platform, so we had to provide relief there. So that's just another example of what we needed to do, and I hope indicates the continued openness to doing that where necessary.
Appreciate it. Thank you, Mr. Chairman.
Mr. Laurel.
Thank you, Mr. Chairman. The CFTC, unlike most other financial regulators, is dependent upon an annual appropriation from the Congress, and it has no reserve fund. This is, I'm not sure everyone understands this. Quite frankly, the other four main financial regulators have in some parts some self-funding mechanisms, and CFTC does not. When the government shut down last October, the equity markets were still overseen by the Securities and Exchange Commission. Federal Reserve was open for business. And yet, futures and most swap markets were left with essentially no cop on the beat. What happened, or rather what activities were halted during the government shutdown? And the second part of that is, would a fee-based system outside of the appropriations process add more certainty, if not more resources, to your work?
Thank you, Congresswoman. Yeah, the time of the shutdown was unfortunate. We were only able to have essential staff at the agency during that time.
So you had to furlough, is that right?
Yeah, I suppose it's another way of putting it, and so essential staff was present, so some of the key function areas of the agency had folks devoted to that during that time, but most of the agency, was not in the office during the shutdown. So it was a little bit unfortunate too, in the sense that we were also overseeing another key implementation date at the time. It was when self-registration, the self-registrations became effective. So that created a number of different issues that had to be dealt with, and it made it especially difficult that we had so many staff away. Certainly, I would think a user fee would...
Let me, just on the point you just made, what activities were halted during that shutdown?
Well, I don't know. I'd have to go back and get back to you, Congressman. I'm not sure, because essential staff was allowed to come in, and so we probably had key people over, at least the division directors, for example, there.
I would like to, and if you can get back to me on that, I would like to know what interruptions there were in the course of your, something had to give.
Yeah, no,
something had to give.
There was not typical normal operation.
Okay, so
yeah.
Please let me know what the result
Sure.
of that was. And I'm sorry I interrupted you on the fee.
Yeah, just on the fee. I mean, obviously that would be very, very important in terms of certainty, and it would give us a better ability, I would think, too, to plan, because you'd be able to predict based on the calibration of the fee or however it's designed. But
transaction tax, what?
Yeah, I think what the president's budget recommended was a user fee, so it's something like a transaction tax. But the details would have to be worked out later.
Let me. Your colleague, Commissioner Chilton, said of the President's request, quote, "This budget asks a strained and exhausted CFTC staff to do the impossible with too little. We work hard here. We have been granted needed regulatory tools to do the job. A magic wand, however, is not among those tools, and we are not magicians. The agency requires basic, minimal support to accomplish our newly assigned tasks. Sadly, in this regard, the President's budget request fails," end of quote. In your testimony, you stated that the CFTC is not able to complete its mission at current funding levels. Is the President's request enough for the CFTC to complete its mission? And then I have a follow-up question.
I believe this request will put us at a level with respect to FTEs or staff to be able to execute on those three key core areas that I mentioned: enforcement, surveillance, and examinations. Obviously, with even more resources, we can do even more and do an even better job, I believe. But I think at the request level, we will be on the pathway towards sustainability in terms of what we need to continue executing the way that I think the American public needs us to.
Mm-hmm. Again, according to Commissioner Chilton, your limited resources have already led to slow investigations and the prioritization of enforcement cases. What is your investigations backlog? Are cases going uninvestigated? And are we setting ourselves up for the next MF Global or worse, another Great Recession? And that is about underfunded priorities. So can you...
Yeah, and the
what's the investigations backlog?
I'd have to get back with you with specifics, Congresswoman. But again, just speaking generally, if the fewer resources we have means the fewer people we have, which means that there's just going to be a lessened ability to pursue referrals that come in from folks on the outside or the whistleblower office that Congressman Bishop mentioned.
Mm-hmm.
Or referrals that come in from our Division of Market Oversight, which surveils the markets, leverages technology to do that. But we're not going to be able to pursue all those leads, if you will, and do the sort of investigation that we might otherwise like to do if we're constrained.
Let me, if I can, I just had a piece of information that, and my colleagues may be aware of this, the CFTC was unable to file charges. That's what my next question was, what cases are going uninvestigated. Unable to file charges against certain individuals in the London whale case because it didn't have the funds to do that. This is from the head of enforcement at CFTC in an interview with the Wall Street Journal last year. So I would also like to know what cases are going uninvestigated. That would, I think, bear some light for this committee to know what we're doing. I happen to believe that the budget is not enough. I heard your answer to that.
Well, you and I agree on that. Let me give you another example. There's two major cases underway right now. One is the MF Global bankruptcy proceeding, as well as the MF Global enforcement actions. And to do an able job in those matters, we need to have expert witnesses. That's another thing that hasn't been discussed, but is critical to bring in a successful, complex case. And again, if we don't have enough resources, we're not going to have the experts that our litigants need to be successful in court.
Well, that leads me to what I had asked before about, are we setting ourselves up for the next MF Global or worse, another Great Recession?
Well, that's why.
The result of shortchanging the resources to this regulatory agency, which has been handed an exceptional amount of increased responsibility, and with fewer funds than it needs in order to be able to carry out that mission. Could we look at another MF Global?
It's certainly conceivable. Again, that goes back to the examinations function. To be confident that we're not going to see a situation like that again, we need regular, thorough examinations, not duplicative examinations, because the chairman's point is certainly right. There are other entities involved in this process, but just to do the sort of spot checking of the front line examiners, that's not being done now. It's not. And I was actually learning this in a conversation earlier this week. There was a time before these increased responsibilities where you would see more of that. But again, we just don't have the staff among the examinations team to do that minimal level of examination.
If I could just ask you to provide, I would like to just thank you, Mr. Chairman, for your indulgence. Final, please, if you can, what I would like to know from you is, at what level of funding are you able to carry out the regulatory function and mission that you have been tasked with? And I'm not saying, pie in the sky. I'm asking you to let us know what this agency needs to be able to do its job and to be able to save maybe another $1.7 billion, help us to decrease the deficit, and just in terms of carrying out your operations. Thank you so much,
Mr. Rooney.
Chairman.
Thank you, Mr. Chairman. Mr. Wetjen, in a Senate Banking Committee hearing last summer, the former Chairman Gensler testified that the CFTC has clear authority to police the physical and derivative markets for aluminum. He also stated that the London Metals Exchange is operating under a no-action letter agreement with the CFTC as a Foreign Board of Trade or FBOT. It's expected that the Foreign Board of Trade will maintain the same quality of market expected by American consumers and is typically exhibited in domestic exchanges regulated by the CFTC, such as the Chicago Mercantile Exchange and the International Commodity Exchange. Do you agree with those statements by your predecessor that the CFTC has the authority to regulate this FBOT?
Thank you, Mr. Carter. I'll have to confirm this to be sure, but I'm nearly certain that the LME has applied to become a Foreign Board of Trade. That's a relatively new rulemaking that was passed. In fact, it was one of the first rules I voted on. So it was finalized just a couple of years ago. But again, back to the overall discussion about resources at the agency, we are continuing to work through those applications. And that's another area that I haven't focused on as much today during this testimony, but we also need staff to be reviewing these registration applications that are coming in from not only FBOTs, but other registration categories as well.
Okay. Well, this second part of the question is less about manpower and resources as opposed to your opinion on the matter when it comes to specifically an example. The Metro International Trade Services waiting period for aluminum has grown from 6 weeks to 16 months since being purchased by Goldman Sachs. The company holds 1.5 million tons of aluminum, and this man-made backlog was created to drive up the commodity premium for profit, and it's cost American consumers, as you can imagine, more than $5 billion over the last 3 years. Do you believe, in your opinion, that this type of behavior in the market violates the conditions of the no action letter that I referred to in the first question?
Congressman, I have to get back to you because it would depend in part on the actual terms of the no action relief. But apart from that, as you alluded to in the earlier part of your question, we always have manipulation authority over the underlying commodity if it's something that's being used in interstate commerce. So we would have that authority in any event. I'm not sure, and I can get back to you on this, but I'm not sure exactly what the conditions and terms of the relief LME is operating under are. But again, I also think they have applied to become a Foreign Board of Trade, and there would be a number of obligations they'd have to adhere to as a registered FBOT at the CFTC. But I can follow up and give you more details about how the no action relief they're under now actually operates.
Okay. Thank you, sir. Thank you, Mr. Chairman. Yield back.
Mr. Farr.
Did I hear you right that you oversee 400 trillion?
Yeah, the notional value of the swap market fluctuates globally, but it's the last I checked, I think it's somewhere between $400 and $500 trillion. Yes.
And we're
That's
arguing,
outstanding notional value.
And we're arguing over a budget increase of $65 million.
Yes.
You know, I think your budget sucks. Put it in the street language. And I'm glad this hearing's all been recorded and taken down, because if anything goes wrong, I want people to reflect back on March 6th, 2014, the Ag Appropriations hearing, just to reflect on, you know, that we asked you these questions about this responsibility. I think the administration is underfunding you. I mean, you got $100 million less than what you asked for last year. And now you come back in and certainly needed that $100 million and are only asking for $65 million. I mean, we're just sitting here trying to figure out how much 400 trillion is. Nobody in all our bright staff back here can figure it all out. It's just a lot of money. It's more, and that you're not open 7 days a week. So this is more than $1 trillion a day.
Yeah, it's a substantial marketplace. There's no doubt. It's huge.
Well, what's the what's the worst case scenario? What happens if you fail? If somebody gets by your surveillance examinations or lack of enforcement?
Well, I think maybe one way to answer it, Mr. Congressman, would be to just look back over the last 6 years or so, and we've seen what happens when you have major participants in the derivatives marketplace fail. And we've seen several examples of that, and it had a reverberating effect throughout the financial system. I'm not suggesting that the only cause of those failures was the activities of those firms in the derivatives markets, but it gives you some sense of how bad things can get if these markets are not overseen properly. There's just no doubt.
Has anybody figured out what that value is? What that how many trillions that is?
I'm sorry, trillions.
Of what the market of the negative does that?
Well, I mean what do we lose? 8 million jobs as a result of the financial crisis.
Just in this country.
Just in the I mean it's.
Well, I think we're getting the point across. I just hope our committee, I mean, I've been on this committee a long time, and I have to admit that not many people in Congress nor this country understand what this Trading Commission does. You're the only one that isn't self-funded, I understand. I mean, all the others have a user fee?
Yes.
And you collected $1.7 billion in fines?
Yeah, the SEC has a bit of a hybrid system.
And we can't even give you another $65 million when you've collected a gazillion times more than you are asking for? I think I'm just trying to plead with my committee members and our colleagues that this is a really important responsibility. Most of us here in Congress are just ordinary people, and we don't have a lot of background in financial markets and things like that, and I don't think most of us could discuss intelligently swaps and options and futures. And yet we have that responsibility in this committee. And I'm just pleading with my colleagues that I don't think we want to play loosely with your budget, particularly when you're in a new realm after what we've gone through. You're the future. We're supposed to fix things that are broken. And we learned that this was broken, and it had a very serious detrimental effect to American economy, to world economy. And now we're going to try to make sure it doesn't happen again. And can't say that publicly. We're just kind of being a penny wise, pound foolish right here. And I hope that our committee will follow your requests and fully fund you. Thank you, Mr. Chairman.
Thank you. Well, thank you, Mr. Chairman, for your testimony. Of course, I think good people can disagree on exactly how the funding and the dire need of resources and looked at this, but we've taken your testimony into consideration, and we certainly understand that you have an important responsibility. And that what you do is no small thing, and so we do understand that. We want to provide the resources that you need, but at the same time, we want to make sure that we're responsible to the taxpayers and find that medium and happy balance between the two. And so, again, we appreciate your work at the Commodities Future Trading Commission, you and all your colleagues, and so we look forward to working with you on this as we continue through the hearing process and through the FY15. Thank you.
Thank you very much, Mr. Chairman. Thank you.